All right. Welcome, everybody, to the Orange Wheel podcast, where we support business leaders in navigating the monetary transition. Joined here today with a friend of mine, Fiat is Worthless, is his handle on X. How are you doing today?
I'm good, man. How you doing?
I'm doing quite well as well. It's a beautiful day here in Copenhagen. Sun is shining, skies are blue. Temperature is just perfect, so it's a wonderful day in paradise. How is it where you are?
Yeah, about the same, man. Everything's going great.
Fantastic. So, for those who, most of my audience might not be familiar with who you are. So maybe just provide a bit of a background about your who you are and what excites you about Bitcoin, and a bit of your Bitcoin journey, I suppose.
Yeah, sure. Yeah, so I guess I'm Canadian. I kind of finished university and went right to the oil field, and I was kind of I don't know, work hard, play hard for I don't know, my early 20s, and long story short, I ended up moving to Sweden. My now wife. So during that whole period, I was just basically trying to earn my way through the fiat mining uh, strategy to wealth, and it's just kind of spinning my tires for I don't know 8 7 8 years. And then as you get older, you start to start thinking about marriage and kids and adjusting your time preference. So I started looking into capital markets and where maybe I should put some money for the future. And just as I started to do that, that was in 2020. Uh, which is a very interesting time because we had everything sell off in COVID crash and then a V-shaped recovery where the markets pumped to all-time highs when you had Main Street closed for the most part. I was looking for work as just moving to a new country, and it was a very strange time. And essentially, I started going down the rabbit hole through some podcasts. So it's interesting now. I didn't think I'd ever be going on podcasts like Bitcoin now. I didn't think I'd ever be on a podcast. I was just like a consumer. So it's really fun to be doing this. I appreciate you having me on. And
Certainly, yeah.
yeah, so it's just like once you start looking into that, it's like, well, why are the markets rallying? And then it's like, well, there's like a lot of liquidity going into the markets. Well, what is liquidity? Well, it's just like a stimulus. So what the hell is a stimulus? And where is all this money coming from, and why can't I find work? It's like, and then you get into the what is money question, and you realize, well, money is just kind of just a ghost of a construct. It's not real. It's just created out of thin air. And I come from kind of Western Canada, as you do, and we're pretty in the West. We're pretty, at least economically conservative. I don't want to paint you with a broad brush, but in general, we kind of want to think like, okay, we're going to be conservative with our finances. We're going to be work hard, and you think you're playing in a fair game, but in reality, we're playing in a highly manipulated game. We do not live in a free market. We live in a highly manipulated, controlled market. It is a quasi manipulated market. And once you start going down, okay, well, where do I, in this situation, where do I position myself? It's like, okay, well, what can they not create out of thin air? And that only leads you to like, well, I guess real estate. Okay, you can't create a building out of thin air, although you can create the credit to purchase a piece of real estate out of nothing. That's a whole other question. In theory, you can buy a piece of a company, a share of an actual company that took proof of work to create, right? Those can also be printed out of nothing. So also not a very good one-for-one analogy. Gold, I guess, you can buy like precious metals, right? Depends on which metal, because those can also be mined at different rates and have different stock to flow ratios. And then I came across, well, what about this Bitcoin thing, right? And then you start going down that rabbit hole, and it seems to be the most real thing that the world conceives or perceives it as being fake. It's the most real thing that everyone thinks is yes. So, I mean, when you see that, it's like, and I got very excited about this, obviously. I think everybody gets all fired up, and like, I started to panic. Like, I need to buy as much as I can before everyone tomorrow figures this out. And this is like, I'm running around telling my wife, my wife's family, it's all going to collapse. Everything's going to hyperinflate. We need to buy more Bitcoin. Blah, blah, blah. Like, it's a pretty serious experience to have happen. And then, of
Mm,
course, you realize like everyone is asleep at the wheel. And you think, okay, well, either everybody is right and I'm an idiot, which is
mm,
very possible, which is very possible. I could be an idiot.
mm,
Uh, I'm well aware of that. Or this could be an actual paradigm shift.
mm,
This could be the beginning of a complete overhaul of the monetary system. And we just so happen to be born at the right time with the right
mm,
thinkers to create this thing over from the 60s till now through different forms of cryptography and movements, and now it's here, and here we are on year what 16. I mean, we hit the proverbial jackpot. We just
mm,
won the
mm,
lottery in terms
mm,
of information arbitrage against
mm,
8 billion people and how many actual Bitcoiners there are. So here we
mm.
are. How lucky are we?
No, that's a great great story, great way to kind of open up here because I think it touches on a lot of the obviously the big questions, right? But I think my first reflection is it's great to hear. I think you're definitely a minority of people when it comes to investing your own wealth and actually thinking critically about it and doing the examinations into those alternatives because myself included, but almost everybody I know, very few people take the time to even do analysis into stocks that they buy, right? It really happens. I feel like most people do either word of mouth. I heard the stock tip from my friends or Jim Cramer, or they're talking about Tesla on TV or Microsoft. I'm just going to buy that.
Yeah.
Or they trust a financial advisor, and these financial advisors, I know a few of them, and I don't want to cuss them too hard, but it's not like they're doing much research either, right? Their firm they have a research department, and they kind of do a whole bunch of analysis, and they're just basically told what to do for the most part, right? So I think there's very few people in this world that are critical of that question of how to invest wealth, and then also willing to do the hard thinking and research and then kind of coming at it from more of a first principles kind of perspective. So it's really just great to hear that there are at least some people out there who are willing to think critically. And this, I guess, what prompted you, I guess, is also interesting, right? That idea of during COVID, how it was a clear disconnect between the real economy that you can see with your two eyes is not functioning properly when everything's locked up, and then
Right.
the markets, which are just booming, right? And then I think we tend to have this false belief that markets and the economy are the same thing. Markets are up, the economy is good, and vice versa. But obviously that's not the case. And then that kind of leads to manipulation of the markets and then the manipulation of money, which is the most important market in the economy. So it's interesting, and I guess that's my only reflections. There's a lot of talk now about Powell, and the political influence on Powell, Chairman Powell, the chairman of the Federal Reserve, and then his speech at all of his speeches, his most recent one at Jackson Hole just a few days ago. I mean, I just feel like most people, you take a step back and you're like, how absurd is it that we are all hinging on every single word, every comma, every pause, every intonation, and everybody's just dissecting and analyzing what could he possibly mean by that particular pause? Does that mean he's going to maybe reduce interest rates by another 0.25% at this point in time? It's just it's as you kind of said, it's so obvious that this is not a free market, right? That we're kind of treating these individuals as seers and all trying to kind of figure out, okay, what could this mean for the markets, right? When really it's just, I think, very absurd. So I think I'm looking forward to a point where Bitcoin will replace this kind of centralized fiat Ponzi as well. Okay, but anyhow, enough of me ranting.
Oh, it's good. I like it.
Uh, I think the other last thing, maybe while I am ranting, because the other thing that I thought was kind of cool you said is the timing, right? The timing that we live in, and I think I find it fascinating too because think about these kind of like technological shift changes, and I do wonder if it's like had Bitcoin not been invented, what would that future have looked like? Where we just continue to kind of degrade our purchasing power and kind of lead to a greater and greater wealth inequality. Would it have repeated this pattern where there would have been some sort of like civil conflict, either wars or something, to kind of then force a reset? Um, and I think we tend to, or was Bitcoin almost like? I just wonder if it's the extent to which it's like, do we develop technologies out of kind of necessity, right? Was it just? I guess how do I phrase this question? I'm trying to think of here. Um, the timing, is it a coincidence, I guess, right? Is it just like Bitcoin could have been invented at any point in time, or is it really like kind of some way, almost what makes it that it is timed at the time that this is like we need it? You know what I mean? Have you done some thinking around that about the timing of the development? I mean, is it, which kind of came first? Was it the recognition? And I think in the white paper of Bitcoin, there was this kind of idea that, this is connected to the 2008 financial crisis and a recognition and a response to that. But at the same time, the technologies that kind of led to it were probably being developed for things completely different than a response to anything in the monetary or global financial system. So I don't know if that question makes any sense or not, but I mean, I'm trying to, do you kind of, what are your thoughts on the kind of timing of the white paper and it kind of acting as the salvation to the system we're in right now?
Yeah, no, I think the first thing that pops into my mind, there's this really funny video that goes around like between my friend group. It's like this compilation of like David Goggins and a bunch of these like short clips. And David Goggins he's like, "Let me enjoy this pain. Like, don't interrupt me. Let me enjoy this pain." Like the guy just loves sitting and running like 200 miles and just shut up and let me enjoy this pain. It's like, well, what is he saying? It's just like, well, everything is a pain response. Like,
Mm,
you're cold. Okay, that's painful. I need to build a fire,
mm,
right? It's like
mm,
we're getting inflated, our money inflated. We need a hard alternative, hard money alternative. Excuse me. So it's just like Bitcoin is a pain response. It's been a pain. It's been in the works for decades through different
mm,
technological advancements and different movements and different groups,
mm,
and you can't stop an idea whose time has come,
mm,
and here we are, right? And it's basically removing the human error and human emotions out of the monetary system, right? Like
mm,
you said,
mm,
everybody is sitting there. Oh, is Tesla going to go up? Is Powell going to be angry in a speech, or is he going to be like scratching his nose and uncomfortable? If he's uncomfortable, then we sell. If he's confident, then we buy. It's ridiculous, right?
mm,
So we have a whole system that's built on emotions, right? We
mm,
have
mm,
don't believe your lying eyes. Don't verify yourself. Don't think for yourself. You need to just give that to somebody else. Somebody, but trust the experts with your whole life,
mm,
right?
mm.
And now we have something. It's like something that's verifiable and something that's completely finite. That's a pretty stark contrast to what we've been living in, where it's just basically a bubble wrap world. Where yeah, I mean, you have your money, you go to work, you shut up, you pay your taxes, and then you outsource all of your life's energy to someone else to invest who's doing it on like basically an emotional fad basis. Like, okay, yeah, I think we should really get into sustainable companies because it feels good. It's like, okay, I'm not
Yeah.
necessarily those are bad investments, blah blah blah. I'm not here to tell anybody. None of what I say is financial advice, but like there's no structure and deep analysis of why we're doing what we're
Mm,
doing. We are just
mm,
human emotional creatures, and here's something where we're attempting to remove some of that and keep the goalpost stationary.
definitely. Yeah, and I think there's the emotional aspect, which I think is, when people start investing their own money, then you have to fight your own emotions. You know, and it's hard to kind of have conviction in something you haven't done your research in, including Bitcoin, but also stocks and stuff, right? So I think that's why most people who try to invest themselves tend to lose relative to whatever relevant benchmark. And then if you outsource it, you're whatever whichever advisor you benchmark it to, they also have their own vested interests. They're trying to pump their own or push their own company's financial products on you. Okay, go into this fund. We'll only charge you 0.5% versus the 0.75%,
Yeah.
and those things don't really tend to keep up with monetary inflation either, right? Or maybe they just keep up with monetary inflation. But so there's definitely not like, it's not a very truthful system that we're living in, I think, in general, right? There's either you kind of have to take a certain amount of dishonesty and just suck it up, or you turn it into your full-time job almost, where you have to then manage your money and do all the research and everything. And then even then, you might not be able to kind of keep up with the system. So it's very, I think unfair and but yeah, I mean, most people don't recognize the unfairness, which is the kind of crazy aspect of it, right? They just everybody feels this is just the normal. It's the way things always have been. This is the setup. Bitcoin is the crazy uh, scam, right? It's the thing that's the scam. So why do you think it is that most individuals are don't see it the way we do? I guess, right? What is it about the fact that still even today, and in this most recent run, I mean, the institutions are moving, but retail is actually not be participating so much in this particular cycle of Bitcoin. So what is it that prevents individuals from kind of recognizing what's going on?
Yeah, I think it's the madness of crowds theory. I mean, if everybody, if Bitcoin was such a good thing, why wouldn't everybody do it? Why
Mm,
doesn't everybody have Bitcoin? Why wouldn't our government tell us to buy Bitcoin? Why wouldn't the
mm,
TV on the news tell us to buy Bitcoin if
mm,
it's so good? It's like, well, that's a complicated question because what we're talking about is there's a group of people that are benefiting from the current system. Like we
mm,
like to talk about, like I talk about fiat as worthless. I'm talking about fiat as worthless for the majority. Fiat is great for some people, right? If you're within the Cantillon effect and you're right close to that money printer, yeah, the fiat system is wonderful for you. For the
mm,
99%, it's destructive.
mm,
Okay. So it is literally the most worthless thing in the fact that it's taking away from you. It's not only worth zero, it's worth a negative. It's
mm,
extracting your life's value over time. Okay. It's making us sick, right? Through all of our food, all the food manipulation and all the product manipulation, everything we buy is degrading over time. Our actual purchasing power is obviously falling over time. We're giving away our privacy. We're giving
mm.
away the independence of our payments, where they can be reversed or blocked or questioned at any given time. So yeah, it's definitely a net negative. I don't know if I answered your question. I just get so fired up on how much I hate
Yeah,
people.
no, I think it makes complete sense, and there are people benefiting from the system, and there's definitely more resistance. So I think that also frustrates me when I talk to people. They say, well, if it's such a great technology and it's just why is it taking so long to be adopted, right? And I think it's an unfair comparison to compare this to just people going from a flip phone to a smartphone, right? It's not there's much more resistance and inertia when you're changing something as fundamental as the global monetary order, right? It's not just the flip of a switch or a consumer decision to drop this thing and pick up this thing, right? And then, of course, so I think there's different layers to that, right? There's the kind of individuals have been in this thing for their entire lives. There's trust in the government, and recognizing what they say. Then there's the government and the commercial banks and the existing financial incumbents trying to resist it until they kind of co-opt it. It's there's a lot of factors that create this inertia. And it's just interesting. I think you and I, we live in this world, so we also feel like, okay, as you mentioned earlier, everybody, we have to like buy as much as you can right now because the whole existing system is going to collapse. But then on the flip side, 99% of the people out there have no idea what's going on. Um, and so it is this weird kind of dichotomy in terms of kind of like we feel like everything's moving super fast when you're kind of inside the rabbit hole, and then at the same time the adoption rate just feels like it's still a snail's pace at the same time. What do you think about like these new let's say Bitcoin derivatives? I think that's a more general term. And I don't mean just derivative financial instruments, but people getting exposure to Bitcoin through um, indirectly through, for example, Bitcoin treasury companies, ETFs. I'll lump those together for now. I think we're seeing kind of new other options kind of pop up. But do you believe it's really important that individuals, self custody and own the bearer asset themselves? Do you think there's a role for exposure through ETFs and Bitcoin treasury companies? And if so, what are your kind of perspectives on that?
I will start this off by nothing is better than cold storage Bitcoin.
Mm,
And as an individual, people say, oh, it's too hard, or I don't know how, or whatever excuse they're coming up with. There is no better alternative than cold storage Bitcoin, okay, where you own the UTXOs. You're in control of your UTXOs. There is nothing better than that I've found.
mm,
Okay.
mm,
Now, when you get into an ETF, okay, you're again outsourcing your custody and you're taking a vig off of whatever, whether it's 1%, 2%, whatever they're charging you to manage those UTXOs on your behalf. right?
Mm,
It's a walled garden, and you have a paper claim on
mm,
that. So it's a
mm,
recreation of the fiat monetary system before we went off of gold standard.
mm,
So it's the blacksmith that holds the gold, and then he issues pieces of paper where you have a claim on that.
mm,
The question is, will they issue more pieces of paper than they have in the vault? I mean,
mm,
humans are, if we follow incentives, which I believe in, you
mm,
follow the incentives, it'll show you the results. Paper claims will be um, obviously added, and that will not match the actual Bitcoin. So
mm,
if you, I mean, is it better to have that than just holding fiat? It's like, yeah, okay, it is. You do have
mm,
indirect exposure. Is it optimal as a public citizen, with a rational public citizen? I think you should just go and figure out how to buy Bitcoin. Information is
mm,
abundant. If you don't know how to set up a hardware wallet, there's 1,000 tutorials. There's AI. There's Google. There's If you are motivated, you can figure out how to write down 12 words, right? Plug in something and write down 12 words. If you're motivated and you have
mm,
courage, right?
mm, mm,
The, the problem with what we've been talking about is the amount of courage has been just stripped from a society, right? People
mm,
don't even have the courage to write down 12 words
mm,
because what if I screw it up? What if I'm
mm,
wrong? What if?
mm,
It's like, so
mm,
you're willing to outsource to these institutions, companies or ETFs or whatever. You're giving away your power because
mm,
of the lack of courage,
mm,
ultimately.
mm,
So, if we get into sorry if I can continue, about the treasury companies, I mean, some will outperform and some have outperformed. There's a few that have. The question remains, will they continue to outperform? What they are doing essentially again is selling pieces of paper or Bitcoin, right? Here, buy my shitcoin. I'll buy and hold the Bitcoin, right? Now that shitcoin may outperform the Bitcoin, right? But it ain't Bitcoin,
mm,
right? So
mm,
now the argument will be, well, some people can't buy spot Bitcoin. Okay, well that's true. Some people can't. They can only buy the equities, and they're locked in a certain market, or they're locked inside of. But again, you are only perpetuating the current system, right? You're only
mm,
you're only just saying, okay, well, I want to keep participating in a system that keeps my capital locked up and it's permissioned and it's owned by someone else.
mm,
That's right. So do I think that some treasury companies that are offering a massive product like an MSTR, okay, they're trying to arbitrage the credit markets, right? They're basically providing a solution to a collapsing treasury market. Like,
mm,
yeah, I mean that's a pretty good business model. And then they're piling it into Bitcoin. So it's like, are they profitable? Yeah, in the tens of billions of dollars profitable
mm.
annualized. Yes. So it's like that company is capitalized on Bitcoin. Great. Maybe I should own a share of that. Maybe, but realize that you are now going out on the risk curve, and it's not.
Definitely. Yeah, no, I think it's a fascinating debate, right? And I think there's different positions on this. I haven't fully myself kind of taken a firm stance on it. I'm kind of listening to different perspectives. But I can see, so for instance, I was in BTC Prague back in June, and Eve, the CEO of Tobam, he went up on stage and kind of had a presentation saying, the currency of the future. He's like, Bitcoin is going to be the gold of the future, and then the currency of the future is going to be the equity in these Bitcoin treasury companies, right? And I don't agree with that. I just don't. I don't think that's the way it should be. And then I also don't think it's practically going to result in that way either, right? I kind of don't believe it, but I think there are a growing cohort of or a cohort of people that believe that's the way it should go, is kind of replicating a bit the fiat world on Bitcoin. If we do go that direction, I would hope that we could have the ability to verify every layer within that, so that if everything was to be on chain, then I guess we could not trust but verify everything down, right? So maybe there's a model in which we can have that kind of like layered system still be one that is not certainly for like
Like a zero,
abusing the trust of people,
like a
abusing
zero
people's trust, or
or something. Yeah.
yeah. And then I think on the other side of the spectrum, you have Jack Dorsey and Jeff Booth, saying that if Bitcoin fails as a medium of exchange, it fails as a store of value as well. And I can also see that perspective, right? And maybe I think the hunch I sort of have is like I think the end state will probably be everything on Bitcoin. Bitcoin will be the sort of value medium of exchange and unit of account. But the pathway to get there might involve, and I think this is just human nature as well to do this, to like experiment in so many different things, build new blockchains, uh, try to see how it integrates with the existing financial system in novel ways. Particularly if there's any the way the free markets at least works is people can take risks, try things, and if there's money to be made, then they'll continue doing that, right? So I think we will see like, and I think what we are seeing is this um, diaspora of like different ideas, and some of them are uh, have utilization that at least some segment of the population finds attractive. So for those who just want convenience factor and don't want to have to hold their own keys, they have a preference for some of these stuff, right? We're definitely seeing that happen. But I think in the long run of history, I think we're going to see anything that's kind of an intermediary between like the ability to spend and the ability to save is just an inefficiency in that system. And so I think those will be pulled out. But any of the cool novel features that are created can then be replicated on Bitcoin, right? Bitcoin can be programmed to bring in the useful functionality. But then we get the debates like we do with knots and
Core.
core. Yeah. Okay. But anyhow, that's a long rant, I suppose. But I guess my thing is I love the debate. I don't necessarily have a firm position one way or the other, but I think anything that doesn't really like abuse people's trust or really, I don't know if there's a better word for that, right? But like, as long as the system itself is fair, that's what's important to me. Yeah.
Yeah, and I can maybe add to that a little bit. The way that I see it is, in order to acquire a Bitcoin, Dylan LeClaire said this, not mine, but this is brilliant. In order to, well, it's simple but brilliant. In order to acquire a Bitcoin, you must either mine a Bitcoin and
Mm.
provide the proof of work and the energy and the computer equipment,
Mm.
and win the block and get the reward, or you must buy it from someone else.
Mm.
Okay, that's it. That's the only way that you can get a UTXO. Those are the
Mm.
two ways. Okay, so that is a cold hard truth of a system that is getting something for nothing. The whole thing is built on getting something for nothing. Okay,
Mm.
everybody wants something for nothing. I want
Mm.
to do no work and I want to get lots of it. Right? Okay, so that is a cold hard check on the fiat system. And
Mm.
if we, like, a lot of times people will be like, yeah, but it's not going to be a medium of exchange because of capital gains, right? Because when you make purchases, then that's a taxable. It's like you're just
Mm.
describing another problem with the fiat system.
Mm.
It appears to me that there's really nothing broken with Bitcoin. It seems to be working. I mean, its uptime is 99.9% of the time. There's
Mm.
technology just going out the wazoo. Like, you go to these conferences and there's Arc and there's Lightning and there's different businesses and there's all of these different technologies. And the problem with Bitcoin is the fiat. It has to exist for now in the temporary fiat system, right?
Mm.
It's
Mm.
why won't it be? Why can't the bond market just go and buy spot Bitcoin? It's like, because their system is engineered so that they can't. There is some
Mm.
sort of agreement, or there's some sort of fence that they're not allowed to cross.
Mm.
Take
Mm.
that
Mm.
capital and buy that. It's not like it's a physical thing.
Mm.
They can, but they just are living in a system that has a border on it, has a restrictive nature.
Mm.
So
Mm.
now, how does that play out in the future? Well, I guess places without those restrictions will flourish,
Mm.
and the places with more and more restrictions over time and top-down control over time will perish.
Mm.
Yes, and I guess
Mm.
is that going to be messy? It's like, well, yeah, I guess so. I mean, like, the USSR collapsed. I guess, you name it. It's like, yeah, then this other country hyperinflated. It just kept going. Like, we need to have price controls. That's the new one that's been popping up in the mainstream media now. It's like, gasoline shouldn't be higher than X. It's like, okay, go ahead, do that and see what happens. It's like
Yeah.
every time there's a capital control, it leads to a shortage.
Yes.
Time, time again. And
Yeah.
now we're doing it not only with gasoline and groceries and whatever that quote unquote shouldn't be higher than X, right? We're doing it, well, the price of interest rates, the price of money shouldn't be higher than X. It's like,
Mm-hmm.
well, yeah, it's just leading to a shortage of value in the system and a shortage of prosperity in the system, right? It's not about what should be, it's about what reality is. Bitcoin is reality.
Mm-hmm.
Yeah. I want to like stomp that point.
So I love the analogy with price controls, right? Because I think people, surprisingly few people, still recognize that if you cap the price of something, you're going to reduce the supply of it, right? And I think most people, unfortunately, are just like, oh, give me something that makes me feel good, that gives me relief from my economic suffering, right? Whether it's government handouts, right? But that creates more problems, right? Or price controls, and it's just like these. The free market will balance itself out, will solve these problems, but we have this belief that we need some sort of centralized interference to be able to resolve the problems, right? But that actually creates more problems. So I think that's just a mind shift change that unfortunately our whole economic theory has been corrupted. But
100%.
I think yeah, they had a lot of really good stuff in there. Yeah, these kind of boundaries, these artificial boundaries or restrictions. Um, Also create opportunities, right? I think that's when, as we go through this transition, in
Mm-hmm.
some ways, it's exploiting and finding workarounds to the boundaries between, the legacy system and the Bitcoin system are where entrepreneurs can actually make money. Is sort of where I see. And then I think the other part that goes into that is I think there is this going to be the shift where right now 1% or less of the population is thinking in Bitcoin, where they want to maximize their Bitcoin stack, but 99% of the population it still wants to maximize their fiat stack. And so there's an opportunity. I think that MicroStrategy and others are basically exploiting those different investor views, right? So they can issue the preferred stock to the people who want the 9% fiat and go and buy Bitcoin for the people who want the Bitcoin stack. And I think we're seeing lots of different business models that kind of ultimately play off that same fundamental difference. But I think, next year is going to be maybe 2%. And then 5 years from now, maybe it's 10% of people that want Bitcoin. And at some point, we'll reach a tipping point where the majority of people want Bitcoin and there's just a dying minority who want the fiat. And then at some point, nobody will want fiat. Nobody will want to hold that shit. I do think the restrictions in one way are unfortunate for the jurisdictions and the people that are kind of in those systems because they're restricted access, but they're also the opportunities for the entrepreneurs to go and, I guess, create value for facilitating workarounds.
It's an interesting creating value. Maybe I see it in a little bit of a different way. Like I'm reminded of the article everyone's a scammer. That's on the Nakamoto Hero chart. So it's just like going out there and telling somebody you should buy Bitcoin and put it into cold storage. There's really no money to be made there other than unless use my discount code on this exchange or buy my hardware wallet. Like there's very little juice to squeeze out of giving somebody that advice, right? And right I mean, yeah, it's just a fact. I mean, you would be better off had you owned Bitcoin. Now, if you go up to somebody who's like we've talked about, maybe this is a good segue. You go up to somebody like in Canada who's like, I just love real estate. Like, I just want to buy as much real estate as I possibly can. If I just had another Airbnb property, then I'd be doing real good. It's like, okay, if you go to that person, it's like, okay, I want to tell you to just buy UTXOs. However, you appear to be addicted to real estate. So if you must buy the shitcoin that is real estate, then maybe I can make that into a hybrid where it would be actually better for you because we're going to add UTXOs to the mix, and then over time you will get more fiat, which is what you want, right? I can offer that as a service, and the math will work, in theory as we see it, and then they'll be happy and I'll be happy, and then there's a arbitrage on basically the knowledge of the person who's asking for it and the person who's offering that service, right? It's like what I want to say is, I mean, the store of value, the monetary premium on real estate is obsolete. It's just not well understood, right? Real estate, as it like in its large form, which people, yeah, okay, there's utility, people live in it, but buying an Airbnb to rent it out, that's obsolete. That whole thing is obsolete, right? And it's like, yeah, I mean, some people still want to buy it, and they still think they want the cash flow, or they want to feel good about the check coming in every month, and they want to feel good about driving by in their car and saying, you know what, see that house over there? That's my Airbnb. Like, look at the curb appeal. Like, look at that nice fence I put up, and Yeah, you know that thing cash flows like 3 grand a month. It's like, yeah, nice, and then it makes them feel good, but they don't know that it's obsolete. The whole idea of that is obsolete. But I mean, let's talk about the real estate. I could see you have a lot to say, so I'll take a pause.
Yeah, no, I think it's great. I mean, I think it's interesting, the real estate phenomenon, because it's certainly in Canada, also here in Denmark. I think most likely similar in Sweden, but like very large amount of people's personal wealth is locked up in real estate. And I think there's been this um, belief, longstanding belief, at least through my entire lifetime, that like if you want to make money, you do it through real estate because real estate markets always go up. And then I think, I think I also tended to believe that. I bought a property in 2009 and then sold it in 2018. And I obviously didn't buy a very good one because I didn't make that much, even in fiat appreciation. Um, but that's the belief that a lot of people have. It's like, get on the real estate ladder as soon as you can, put your wealth in that, and you'll do well, right? And it has sort of worked out, at least as a hedge against inflation on average, for people. But they tend to see it as a gain because they don't really know what the true cost of capital is, the true monetary debasement. Most people think it is the CPI, which is like 2% a year or something, right? When in reality, it's like 7-8% a year, and real estate's only keeping up with that. Um, and then what people fail to kind of keep in mind is like all the headaches and nuisances that go into owning real estate. It's like it can be a huge pain in the ass. I had a condo that had a bad condo board that was like negligent, that was not really addressing some structural issues with the place, and trying to sweep things under the rug and all this stuff. And so it can become just a huge headache. And then when I rented it out, I had a good tenant for a few years. Then I had a bad tenant, or a mediocre tenant who was a little bit late sign of time. And then I had a really bad tenant. And so there's just all these things that are kind of all these risk factors that you don't really take into account. And then all the time factors that you have to kind of put in to deal with all these nuisances. So that's what I love about Bitcoin, is that it's like not, there's almost no time commitment to it. I think there's the issue with so many other stores of value is like, um, they own you more than you own them, so to speak, right? They own a lot of your time. Stocks, as we mentioned earlier too, if you're managing your own portfolio, you have to kind of stay on top of the stock market all the time, and that can become almost a full-time job.
Yeah,
So it is, yeah.
sorry. Go ahead. Go ahead.
Yeah, no, I was going to end by saying, yeah, I mean, I think ultimately we will get to the point where people realize that Bitcoin is the superior store of value, and but I am kind of curious to see how that, at what rate that unfolds, because there is so much vested interest in the real estate market. If real estate prices drop, that could trigger a huge recession. We saw that in 2008, because real estate is a primary collateral unit for so much of the loans and debt that we have kind of floating around the system. So they're going to do everything they can to kind of prop up real estate prices,
Yeah.
even in the instance where people recognize that Bitcoin is the better store of value, and people want to move, increasingly want to move their wealth out of this asset class into that asset class. That, I think, dynamic is going to be interesting because it can't happen just overnight. It'll have to happen over a fairly long period of time for it to prevent any sort of collapse. So, any perspectives on this kind of like, the rate of change, and what dynamics you think will be in play here?
Yeah, well, just on your first point about all the headaches of counterparty risk and all the things that go into owning a piece of real estate, I'm reminded of, I believe it's a Fight Club quote: "The
Mm,
things you own end up owning you,"
mm,
and that could not be more true if you have 4 Airbnbs where you're organizing the cleaners and the key drop off and the damages and the dogs and the da 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 da. You are tied. You're chained to that thing.
mm,
We're chained to it without the chains. You are not allowed. You're not allowed to just go to India on a trip for like 6 weeks and go do yoga. No, you have 4 Airbnbs. Lucky you. You have to like maintain those things and make sure everybody's happy and make sure your star rating doesn't go down. You have a star rating that you have to take care of. But don't you know that your rating might drop on Airbnb, and then your whole blows up because you have a 1 star out of 5, because nobody wants to rent with a 1 star. It has to be 5 stars, right? There must be something wrong with this guy if his star rating is down. It's a Black Mirror episode. Okay, that's
mm,
it. Same
mm,
thing. Okay. Now, Bitcoin, on the other hand, I think there's like I mean, we talked about this before. I think activity bias. People have this urge to make money. I must be doing things. I must be okay, body in motion. I must
Mm,
work hard and put a lot of time into something. And now
mm,
there's this discovery, this invention where you literally just have to work hard and then you don't have to do anything. Actually, the less you do, actually, the better off you'll be. The harder
mm,
you can sit on your hands, probably the better off you're going to be in the future. Now, that
mm,
is like completely contrary to everything we've been taught in our life. And
mm,
I mean, now if you talk about people with like ADHD and you tell them to hodl Bitcoin for 10 years, it's like, no, they're like somebody who's like addicted to coffee, like drinking 4 cups of coffee. They're going to be clicking and do, oh, I just got to move it around. I just got to like loan against it. I got to do this. It's mad, right? So
mm, mm,
yeah, it's like we are not capable of being able to just sit with a store of value that doesn't require our energy.
mm,
Uh,
mhm.
it's weird. But then, what was the second part of your question again?
The transition. So I guess if we recognize that, fun, fundamentally, Bitcoin is the better store of value than real estate. But right now, most of the capital, most people in the world believe real estate is the best store of value, and so there's so much capital locked up in that. But how does this transition unfold? How do you think it will unfold, given that the current financial system is propped up by the value of real estate?
Right. Yeah.
So how do you think that's going to play out?
I think it's too big to fail, right? Like if we look at the 2008 crisis, what happened? It's just like, yeah, they socialized the losses, right? Everybody was made whole. They just printed money, just like um, every other big crisis is just filled up with money. Now, what happens over time? It's like, well, the wealth gap between the top 1% and the bottom 99% continues to widen, right? And I think there becomes a tipping point where it gets, unfortunately, it leads to like a revolution of some kind. And historically, I heard this stat where if your cost of groceries becomes 40% of your income, then that's usually a trigger where people want to start revolution, like a violent revolution. And knock on wood, I pray and hope that doesn't happen. But that is what historically is the line in the sand for people. We're already being like preconditioned that you don't need to own your home. Like you'll own nothing and you'll be happy, right? So you don't need to own your home. Like BlackRock owns your home and you rent from BlackRock. Like that's okay, right? Like that's already being normalized. Um, so yeah, this idea of, I mean, you've probably seen it even just moving from Canada to here. Like Canada has a massive amount of space. Like we drive big houses. Everybody's got 3 cars. Everybody's got 2 houses. It's like, and then you come here and it's like everyone rides a bike, right? The family has 1 car. It's usually like an older car, and they live in an apartment, right? And that's okay, right? It's like, yeah, and that's, I shouldn't say, I'm not saying it's not okay, but that is normal. That is
Mm,
normalized. Now,
mm,
I
mhm,
mean, Canadian, you said, okay, you need to sell your 5 bedroom house in the suburbs of wherever, then or Calgary or Toronto, and you got to live in this little apartment. And here's a pedal bike. That transition would be like, oh my god, people would lose their. Like, this is slavery, right? But
mm,
here, just like over time, I think housing and the price of gasoline, the price of a car, like go buy a nice V8 Dodge truck in Sweden. Oh, that comes with a massive amount of tax, right? Like, have you
yeah,
considered
sure.
the carbon of your truck? It's like,
Mm,
okay, well, you can't afford to drive it. So then you're going to drive like a little 4 cylinder, or you know what? Go the sustainable route and ride your pedal bike. And you know what? Decrease your environmental footprint and live in an
mm,
apartment, right? Your standard of living is going down. I mean,
mm,
we the amount of space that you have to raise your family and the things that you have is getting reduced. And the
mm,
price is still just as high as if I sold my apartment right here and I move home. I could go buy a house with my
mm,
2 bedroom apartment. The cost of my 2 bedroom apartment, I could buy a house in Canada or in
mm,
Texas. Right.
mm,
So what is the result over time? I guess we're just getting squeezed and squeezed into a different new normal over time. The
mm.
housing market, like you said, will not be, it's too big to fail. They're just going to print it over. And if they do it slow enough and in a controlled way, I think people will just accept the new normal. So,
Yeah, no, I think yeah. A few comments there. I think one is just like I mean, I actually feel my quality of life has gone up being able to get rid of my car in Canada, only having to use bikes.
yeah,
Living
I like it
in a
too. I'm not
more
saying I don't like it. I'm just saying it's definitely smaller. It's a smaller life. It may be better life, but it's a smaller life,
yeah,
right?
for sure. And I think it varies from person to person what their preferences are in that sort of regard. But But I'm with you in the sense that, I think when we do get to the other side of this, real estate's going to be freaking cheap, right? Like once it's been demonetized, I think people will be able to have, there are going to be some areas like urban centers that are still going to be like space restricted. You can only fit so many people into certain areas, but in general, I think people are going to spend much less of their income on real estate, whether it be the mortgages or rental or whatever, right? And people, yeah. So I think that's going to be the ultimate thing, is that people have more purchasing power overall to spend on the life they want to live.
What I
But
will
then
say,
I think, yeah,
go
go
ahead.
ahead.
I just say what I will say is, if we look at the housing price in fiat, it's going up. If we look at the price of housing priced in Bitcoin, it's collapsing. Okay,
Yes.
so maybe right now you have a generation where I heard there's different numbers on this, but I heard the average home buyer in the United States is like 59 years old or something, 56 years old. I've heard 72, which
Fuck
seems
yeah.
really high.
That's
That
probably including second and third properties, right? That's probably why it's so
probably,
high.
if we
Yeah.
couple that stat with like the meme of, uh, I had to buy my house for 100x what a boomer paid for their house, they're going to have to pay 1,000x for what I paid for my Bitcoin, right? So Bitcoin is basically it's like creative destruction, or like a natural check and balance on this atrocity of fiat. It's like the people that are able to move into the new system today, even if you're 21 years old. I heard a guy on Robin Sayers' podcast. He's like an Australian guy. He's 21 years old. He gets it. He gets it. He's locked in on Bitcoin. He's put in the proof of work. He's locked in. That dude, I don't even know him. He's gonna be fine. He's gonna be fine in his life if he just continues to work hard and save in Bitcoin. That's it. Over time, yeah, if the people staying in that system, yeah, it's only going to be a higher wealth divide. But the people that are exiting that system or building businesses on top of that system, the new system, they're going to be fine. So I guess that's my hopeful take.
Yeah, certainly. And I think the direction of travel leads to a much brighter, fairer future for everybody. And I'm looking forward to kind of getting there. And I guess what's exciting and also potentially dangerous is the kind of path between where we are today and the Bitcoin standard future. But I think I used to think in scenarios, and I think it's still beneficial to do that. I used to have a higher proportion of likelihood towards the more like chaotic, conflict, violent kind of transition. But the more I've been kind of thinking about it, the more I realize you're totally right. They're just going to print money to kind of paper over and prop up asset prices in the old system.
Right.
Um, and that's going to kind of, I guess, like prevent it from collapsing, but also kill the dollar or the fiat currencies more rapidly. But I think the thing I hadn't really I think that my newer thinking after seeing some new stuff kind of coming out in the news is what I hadn't recognized that I appreciate more is that I think Bitcoin is not this like completely parallel system, but actually it's like infusing into the existing system, providing solidity and structure by replacing or like complementing the fiat system. So like I think with like mortgages, where like now mortgages will have or debt financing will have a Bitcoin component, right? And so that I think acts as a bit of a hedge to the devaluation as some of these assets demonetize and Bitcoin monetizes. The combination of those two assets together will be relatively more stable than had they been completely separate, where the wealth was just exit one and go into the other.
Yeah. Yeah. I mean, that's a great way of looking at it. I think there's pipeline. People have said, oh, there's different companies that are building pipelines from that system to this system. They're building bridges. There's a lot of analogies. Like I said, Bitcoin is a black hole. It's just absorbing the system. It's eating it for breakfast. Or people say it's a Trojan horse, right? People invite this. They think it's a gift, right? And then there's soldiers hiding in the belly of the Trojan horse that's coming when they go to sleep. Like, yeah, there's 1,000 different analogies. All have a sliver of truth. Yeah, so I think, yeah, the transition like doesn't happen overnight. I think it's just at the rate that people can. I mean, what's the rate of a person reading a book recommendation? Like, what's the rate of you going at Christmas and gifting someone Broken Money? What's the rate, and how long does it take them to read the book? I guess that's the rate of how fast. And I would say out of 100 people, maybe one would read it, and it would take them. It would go on the bookshelf for like 4 years, and maybe they'd pick it up. depending on how much pain they're experiencing, right? So yeah, that's the rate.
Yeah, I'm with you, and but I guess the thing that I guess might change is like again, I think is because as we discussed at the very beginning of the conversation, most people just make their decisions on what other people tell them to do. I think at one point it'll be, and we're seeing this happen now, like well-respected authorities are starting like to, I mean, not that I necessarily respect these people, but in the traditional system, like Larry Fink, but then also some venture capitalists who I think are really forward-thinking folks. They're also becoming proponents, and so I think then I think it becomes not just a each individual has to learn it themselves. I think Bitcoiners we like doing that, right? But I think the vast majority of people do what they're told to, and then I think at one point we hit the tipping point where it's just that is now the new normal that everybody's doing it. So that's why I do think we will have sort of like a more accelerated experience over the next 5 to 10 years. But certainly now, I mean, Broken Money is actually my favorite of the kind of orange pilling books. I like Lynn Alden's style. I find it quite balanced. So I actually gave my dad. My dad picked up. I had Lawrence Lepard's book, The Big Print, and
Mhm.
that kind of helped me orange pill my dad. But now I've given him. He recently had a bit of an accident, so he's kind of immobile
Wow.
for a few or limited mobility for the next few months. He broke a few ribs, so I gave him Broken Money to read as well. So my dad at least reads these types of books.
Broken ribs.
Yeah, and he's like 81 years old, so he actually broke like 6 ribs or something and had a punctured lung. So in a bike crash, unfortunately. So, but he's good. He's good. But no, you're totally right. I mean, the number of people I've tried to like give books to or recommend and stuff, and it's just the hit rate is very, very low on my side, and I think that's the same as most Bitcoiners. So,
Yeah, I mean, I guess when we get into these, like, how fast is it going to go and what's going to happen? The only thing we can really draw from is I mean, history. I mean, that's the study of history. Like, you're trying to examine the incentives and examine the history of different events, and we can like maybe like lay over what the situation we are now and the incentives that we have right now. Are they the same, and what was the outcome of those things, right? Yeah, I mean, people still use fiat currencies even though they're, I don't know, 40% inflation a year in some countries, right? They're still on that system. Are there
yeah.
wealthy people in those countries? It's like, yeah, there's a bunch of asset holders, right, that benefit from, like a Hugo Steins of the Weimar Germany meltdown, where he
Mm.
just, okay, I'm going to borrow as much toilet paper and buy as much gold and real estate and factories as I could. And he became the wealthiest person in the Weimar collapse. Like, yeah, there's a lot of people that do that in these countries. I guess it splits it into like a two outcome, like a bifurcation of the people that understand what's happening in history and those who don't, right? And then I see you mentioned like a Larry Fink. It's like, what about all the people that'll listen to Larry Fink? Well, what I think Larry Fink now understands, a lot of these people that are near the you know the money printer. What they understand is they internalize that they cannot control Bitcoin, that they have no influence over Bitcoin. It's like at first they fought it, and now they have accepted this fact, and now what they're
Mm.
trying to do is put guardrails around it,
Mm.
build a swimming pool or build a fishing net. Where if I can't control all the fish, then I'll just build a really big net, and then when they go in there, they can't get out, right? And then I'll just extract while they're in the net, right? What is an ETF? I'll go and I'll corner this market where people can only, transfer from their Morgan Stanley account in 2 clicks. You don't have to write down those 12 words, man. You just have to, like, 2 clicks and you're in my ETF. It's so much easier, so much better. We manage everything for you. You can borrow against it, right? Look at all these benefits, right, inside of my fishing net. Okay.
Yeah, and they get to charge the whatever it is 1% a year management fees, right? And
Exactly.
they're super happy that their ETF is now the fastest growing ETF of all time, right? It's
Exactly. And isn't that an interesting number, 2%? Where do we hear 2% from previously? Well, inflation, right? The targeted inflation rate is 2%. Well, why is it 2%? Many ask. It's just enough for them to earn a lot of money, but for you not to complain about it or notice it,
mm,
right?
mm,
If it
yeah,
was 10%, people would freak out. I think that's why a lot of people freaked out after the COVID thing, because you had CPI hit 9%, right? That's a big wake up call. That's like people getting shook out of bed. Like, why is it 9? I thought it's supposed to be 2, right? So if the theft is, if I only take one Skittle from you out of your big bowl of Skittles You don't really notice. It's just enough for me. It's just one Skittle. Maybe he was hungry. Like, whatever. You can have a Skittle. But if it's like a big handful, that's too much, man. And people like start to resist. So yeah, if there's an immovable object, people are just trying to put whatever fence around it and build a product and try and put some sort of gated apparatus on top of Bitcoin. And we should be directing people to just get the real thing. Just go for the UTXOs.
Amazing. We're almost out of time, so just one last question before we call it. We'll have to have another call in a few months because there's a lot of other questions I wanted to ask you, but haven't had time to. But basically, for business owners, for people who are leading, maybe they're a small business, maybe it's a bigger company, maybe they sit on a board of a company. What kind of one piece of advice do you think you'd give to these folks who might have heard about Bitcoin, might have their preconceptions of what it is, what it isn't? What one piece of advice would you give to these types of folks?
I guess if you in whatever capital allocation that you're doing within your company, um, whatever strategy you're trying to pursue, the number one litmus test of whether we should do this action or we should not do this action is the hurdle rate or the CAGR of Bitcoin. Okay, so let's assume a conservative CAGR of Bitcoin at like 40%, or let's say 30%, right? Let's just go just brass tacks. Let's say it's 30. I think it's more than that, but let's say it's 30. So if I hire this new person, am I going to be able to increase my company's CAGR by 30% by doing this? Right. That's the question. Am I going to increase the value of my company 30% annualized on this investment? Because if I would have given this $100,000 to this employee, or to this, if I'm going to go buy this asset, or I'm going to go pursue this strategy, if I can't produce 30% return annualized from that investment starting from today, right? Maybe you'll get 30% in like 2-3 years when it plays out, but now we're talking about a different thing. That's now 90%. That's like 30%, 30%, 30%, right? We're talking about from today, are you going to get 30% annualized, 40% annualized, whatever the category is? If the answer is no, then you're better off to divert that capital into Bitcoin and wait and do nothing. That's reality, right? So what is a company? It's a capital allocator. An entrepreneur, it's a capital allocator. Be cognizant of how you're allocating your capital.
I think that's really good advice. And I think it's going to become more and more clear. I think more and more capital allocators are going to start recognizing Bitcoin as a hurdle rate. And I think that's going to have really profound implications on, one, the Bitcoin price, because more people will be putting their capital into Bitcoin. And then secondly, how people think about running a business. I think it's going to be very fascinating to see how that unfolds with time. So really good advice. Thank you so much, Fiat is Worthless, for your time today and for the great discussion. Look forward to following up again in a few months' time and catching up then.
Yeah, great. Thanks a lot, Ted, for having me. It was a lot of fun. Hopefully we get to talk again soon.
All right. Take care.